Literally, that is the shocking international spot price per troy ounce right now. When a precious metal suddenly hits a level like this, it sends serious ripples through the entire global economy. It's a huge clue signaling major shifts just under the surface. But, a number floating in a vacuum doesn't actually mean much on its own. To really wrap our heads around the sheer magnitude of this surge, we need to ground that abstract ounce price into everyday reality. Breaking it down, that $63 translates to roughly $2.04 per gram. Step that up to institutional volumes, and we're looking at over $2,000 for a single kilogram. And for some regional perspective, in South Asian physical markets, local prices are currently sitting right around 6,800 rupees per tola. It just goes to show how a seemingly simple per-ounce price completely cascades into significant tangible costs all over the globe.
Which brings us to the core mystery of our explainer today. The question every investor is asking right now. Is this just another temporary spike, a quick, noisy move in a notoriously volatile market, or are we actually watching the foundational stages of an even bigger, sustained breakout rally? Well, to answer that, we can't just stare at the price tag. We have to investigate the powerful, underlying macroeconomic engines that are actually pushing that price up.
That leads us right into part one of our investigation. What drives silver prices?
Basically, the silver market is a constant, incredibly intense tug-of-war between three massive global forces. We've got the strength of the US dollar, central bank interest rates, and global industrial demand. Let's take a second to examine how each of these primary clues uniquely pulls at the price of silver.
Starting with the mighty US dollar. Because silver is globally priced in dollars, the two essentially sit on opposite ends of a seesaw. A weaker dollar makes silver relatively cheaper and therefore way more attractive to international buyers, which predictably drives up the price. But on the flip side, when the dollar strengthens sharply, it puts a heavy weight on precious metals. Honestly, you absolutely have to watch the dollar if you're watching silver.
Next up, we have central bank interest rates. Now keep in mind, silver is a non-yielding asset, right? It doesn't pay you a dividend just for holding it. So when interest rates drop, or actually even if the market just expects them to drop, traditional interest-bearing investments suddenly look a whole lot less appealing. Almost overnight, capital flows away from those and directly toward precious metals, strongly supporting a higher price.
And this brilliantly illustrates our next point. Part 2 of the explainer, silver's dual identity.
Here is the real plot twist. Silver is fundamentally different from gold. It leads a total double life. On one hand, it acts as your classic precious metal, a safe haven asset and a financial shield when the economy gets rocky. But on the other hand, it's a vital, hard-working industrial cog. It is massively consumed by the electronics and green energy sectors, especially solar technology. This split personality makes its price action uniquely fascinating and, pretty volatile. It might surge because investors are panicking over inflation, or it might surge simply because the tech sector is booming and they desperately need the raw physical material.
Moving on to a very practical part of our investigation. Part 3, physical versus paper silver. We need a quick reality check here for any newer investors tuning in. That 63.46 price we keep mentioning, that is just the paper market benchmark. If you're looking to actually go out and hold a silver bar in your hands, the real cost involves manufacturing, dealer premiums, taxes, shipping, the whole shebang. Physical coins and collectible products almost always trade at a pretty noticeable premium above that baseline spot price.
So the absolute key takeaway here is this. The real cost of physical silver is what actually dictates your investment. You have to weigh that international benchmark against the dealer premiums, the local taxes, and the purity of the metal so you don't get caught off guard. Understanding this difference between the paper market and the physical market is, without a doubt, absolutely essential.
Which brings us to the final phase of our explainer today. Part 4, what to watch next.
So, the crucial point is that markets do not move in straight lines, even in powerful, exciting rallies. Instead of trying to gaze into a crystal ball, you need a solid toolkit to confirm market strength. Step 1, verify if silver is consistently making higher highs and higher lows on the charts. Step 2, monitor the ongoing trade momentum. Is the buying excitement continuing, or is it starting to fade? Step 3, check gold's performance. Usually a really strong gold market validates and supports silver's upward move. And step 4, track that sustained industrial demand we talked about. Asking yourself these 4 questions will keep you grounded. Because, chasing a rapidly moving market can be incredibly risky. Instead, you've got to focus on confirmation. At this intense $63 level, we are officially swimming in a high volatility zone. A strong confirmed continuation could definitely bring in even more momentum, sure,
But actually scratch that. A sudden reversal could just as easily trigger massive profit-taking across the board. Waiting for that confirmation is exactly what helps protect you from accidentally buying at the absolute peak.
To wrap things up, silver's story right now is vastly bigger than just today's price tag. It's a financial safe haven, it's an absolute industrial powerhouse, and it is literally vital to our modern infrastructure and green energy transition. Whether we end up seeing a major pullback or a continued explosive surge, this is absolutely a market you want to keep your eyes glued to. For regular updates on exactly these kinds of massive market forces, make sure you subscribe to FinVerse and turn on those notifications so we can keep investigating together. But I want to leave you with one final, provocative thought to ponder based on all the clues we've uncovered today. Where do you think silver goes next? Are we looking at a push to 65, 70,